Good morning and welcome to the Axis Securities Market Minute podcast. My name is Akshay Chinchalkar and today is Tuesday, 21st January and the time is 7 a.m. US cash equity markets were shut yesterday for the Martin Luther King Jr. holiday, but equity futures jumped as President Trump began signing executive orders on his first day in office but did not impose tariffs. S&P futures rose 0.4% while futures contracts on the Nasdaq 100 jumped 0.5%. In other movers, the Bloomberg Dollar Index sank by more than 1%, which was its largest single-day loss since November 14th. Back home, the rupee rallied slightly and settled at 86.57 as domestic stocks rose after a Xi Trump call reduced nervousness about US-China tariff wars. Meanwhile, on a long-term basis, Barclays said that it was looking for the pair to touch 89.5 by end 2025 versus 87 previously. They said that a larger than expected drop in the yuan will exert pressure on the rupee, besides headwinds such as INR overvaluation and a global dollar advance. Talking stocks in the Nifty turned bullish after some initial profit booking, as the support zone of 23,048 to 23,106 remained intact. The index rose 0.6%, its best such gain since 2nd January. The India VIX though rallied 0.67 points, even as 10 of the 12 NSE sectors finished higher. Private banks did the best, jumping to 0.4%, while automobiles dropped the most at 0.5%. Breadth was positive in a repeat of Friday's, with nearly 3 stocks gaining for 2 that fell. Kotak Mahindra Bank jumped 9.2% on reporting numbers that showed healthy asset quality and became the best performer in the Nifty, while SBI Life Insurance fared the worst, dropping 2.7%. Technically speaking, the Nifty came within a whisker of hitting the lower end of our immediate resistance area near 23,396. So for now, a broad range between 23,048 and 23,471 remains in play. What was notable though was that both Friday's and yesterday's price action traced candles with long lower shadows, which means bulls are active just about 23,000. Small and mid-cap benchmarks not only outperformed the Nifty, but also recorded a 5-day winning run for the first time in over a month. In summary, the near-term sentiment is risk positive. Speaking flows, provisional data showed that foreign investors withdrew 4,300 crores on Monday, which marked the 12th straight day of outflows. On to derivatives, and the Nifty's put-call ratio went from 0.91 to 1.03, while the Bank Nifty's rose to 0.63 from 0.55. Around 570,000 Nifty calls and 300,000 Nifty puts were added, and implied volatility fell 34 basis points, which meant that on a net basis, market participants turned cautious. The FII index futures long-short ratio ticked slightly higher from 0.19 to 0.21. Looking at options concentration for the weekly contract that expires on Jan 23rd, the trackable range is 23,200 to 23,600. With notable open interest addition seen at the 23,000 and 23,200 put strikes alongside the 23,600 call strike. Meanwhile, volatility traders ended the day with expectations that the near-term trend is likely to end positive. Talking positioning via net activity in index options, foreigners were bullish alongside prop traders who were aggressively bullish, while retail was aggressively bearish. Looking ahead, the GIFT Nifty was up 116 points. Asian equities were a mixed bag with Japan leading gains. Talking stocks, Kaplan Point and HBL Power were at horizontal support, while BHEL, Bank of Baroda and Adani Green were at horizontal resistance. Policy Bazaar and Concord Bio were at trendline support, while Cochin Shipyard and IDFC First Bank were at trendline resistance. Talking key moving averages for the NSE 500, 25%, 22% and 34% of members were above their 50-day, 100-day and 200-day average. No major economic data is slated to release today. That's a wrap on the podcast for the day, and we'll see you tomorrow. Thank you.